Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 9th of November here in 2021. And I wouldn't be doing my job if I didn't talk about the Tesla tumble at the start of today's video, which is a good and clear reminder why we shouldn't just buy and hold forever. Stocks do go down, and more times than not, when they go down, they take a very steep, sudden fall. That is always the risk when you are long or bullish only. It works for a little bit. We want to manage risk or mitigate risk by buying into stocks on what we might call pullbacks or retracements. Not at all-time highs. Why? Because even though the stock tends to go higher, there's 1,000, there's 1,100, there's 1,200, and we feel like we're missing out, and we certainly are on short-term gains. But this is the, I don't want to say inevitable, but the probability outcome of a market that is overextended is a big drop. And that drop took the form of about 12% in today's action. But Tesla wasn't the only stock that was down on today's session. PayPal, not coming off of the highs, but actually breaking support. Support for PayPal, the shares at least, are around $220. That's your support level. And that is broken. That's on earnings. So earnings playing, and we can always take a look at what those earnings are. Just to remember, our earnings tab here in thinkorswim is right here. So if you ever are curious about what a stock did, how it performed, and this is the most recent, they don't have that up just at the moment, but it will be updated after the video and after the close. But nevertheless, you can see the prior results on the actual and the Wall Street consensus estimates. And PayPal has a good history of beating their estimation, but doesn't always mean the stock goes up. So it's a big assessment of earnings volatility, and the risk in being long only or blindly bullish. PayPal and Tesla were the weakest stocks in the S&P 100, followed by Visa. It had earnings or has a little share dividend, and we have Pfizer, Caterpillar, and some of the other names. And these are just stocks that are weak in today's session, but it wasn't all bearish. But these stocks, being large market cap names, certainly were factors in today's sell-off. And just to make a comparison, here is Tesla, and this is on our Market Watch tab in the S&P 100. Tesla is a consumer discretionary. It's actually not a tech stock, even though we regard it as a monster of tech. It's actually a retail stock. They sell cars. Simple as that. They sell cars. Electric cars, good cars, but cars nonetheless. Amazon is up there with it, which is a retail stock, even though it is a technology. It's sort of hard to split the sectors in very distinct terms. But nevertheless, Tesla has a market cap right here of $1 trillion. And it was off about 12% today. There's PayPal. In comparison, Tesla is about 5 times the size and market cap as PayPal. Still significant. That's $241 billion. But look at Apple. Apple is essentially double and a half, 2.5 times the market cap of Tesla. And by proxy, about 10 times the market cap of PayPal. So just keeping this in context. These are big declines. Yes, they are. And they did affect the Nasdaq today. And you can see how that plays into the broader scheme. But not everything was bearish. Amazon was actually up on today's session, and it was behind GE, the strongest stock in the S&P 100. GE actually got its new 52-week high on some breakout from consolidation. But Amazon is up. That's a monster of tech. Costco continues higher. So let's look at stocks that are making new highs just quickly in a scan. Those would include in the S&P 500, NVIDIA, which is another stock that got stronger, Salesforce.com, Chevron, Texaco, Qualcomm, AMD, and others down the list. Just looking at a few of them. On a quick note, of course, there's Costco. NVIDIA is a strong stock. Now that made a new high, but it had selling pressure as well. This is why we don't want to go long a stock that has multiple days in a row to the upside, that is very extended above its 20-day moving average. That's a way to quantify if something is overbought or overextended, is look at how far away it is in percent terms or price terms from its 20-day average. 20 days is about 1 month in trading terms, so how far away is it from its roughly 20-day or 1 month price performance? That's all it is. And a stock that is well above it has high risk of a pullback. This is the reminder, and this is the focus of tonight's video. Things that go parabolic or skyrocket to the upside, they have high risk of a pullback. NVIDIA is not out of the woods and not an exception to that rule. Tesla sure felt like it to a lot of traders, but it was not. Tesla remained well extended above that 20-day moving average. And just for reference, how to get that comparison on your chart, it's just the moving average exponential, 20-day, 50-day, and if you look for the longer term, the 200-day is roughly 1 year's performance. Technically it's 250, but roughly speaking, that is what we look at for those trending stocks and trending environments. But what goes up must come down, and that is risk and reward. The risk of shorting what we might call a parabolic stock, or in launch stock launching to the upside, being squeezed, short squeeze, gamma squeeze, or the like, the risk if you go long is one day the rug gets pulled. That's your risk if you're long. Of course, the reward is creeping to the upside and defying probability. What is your reward if you are short? If you are shorting or playing puts in, I'm looking at Tesla, but it could be any stock, and this is true for the broader market. The risk to you with puts or on the short side of an overextended parabolic stock is that it keeps getting more extended and more overbought. But playing within risk controls with put spreads, puts and different types in-out spreads on the downside for the put side, that is going to limit your risk and let you hold on and sustain duration or longer term positions and let it ride against you. But all it takes is 1 day to recoup, in this case, 1, 2, 3, 4, 5, 6, 7, 8, about 8 days in a row of the upside action was wiped away in one trading session. That is the reward of playing a fade or playing a contra trend, or at least a pullback strategy. It is difficult because some stocks like Costco will continue, but they themselves will additionally pull back. So that's the theme of tonight's video, and the reminder from Tesla, which, despite being such a fly-away stock, does remind us what goes up tends to, in the market terms, pull back. That is the broader picture. Of course, outside of Tesla, a quick look at the S&P shows that it has a decent shot. Now, the same logic could be said over here against 4,600. And the logic is for a pullback or retracement toward that 20 exponential. That is about 4,600 in the S&P futures. Will it happen? That is the risk. That is the reward. The risk to the bulls that are just playing bullish, the stock market can never go down. It can only go up. The risk to them is one day the rug gets pulled. That day could be this week. And of course, the reward to those going long at these all-time highs are additional upside activity. But that is strictly against the odds and the probability. But again, markets move by probability, supply, demand, and they're not moved by certainty or predictions about the future. Hence our in-out spreads or any other type of position that mitigates risk. Includes back ratios or other types of option positions, butterflies included. So that's a broad look at the market there. On the Nasdaq, that's similarly pulling back in terms of levels that are in play from 16,400. That could target down to 16,000 once again, or a little bit above it as the EMA, 20 EMA, rises to meet the price. In the Dow Mini Futures, that's up against the 36,500. And finally in the Russell, that did get a breakout, but its breakout is pushing above the 2,400 print, but has traded down from 2,460, which is a good round number reference, about 2,450. So if the markets are to pull back, the reward in the short term is going to be to the downside, and our targets are going to be prior resistance highs and or 20-day exponential averages, just for a simple statistical quantified pullback. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for November 9th, 2021.